This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Paul Dickerson.
Hi, this is Paul Dickerson, and welcome to another episode of the Energy Makers Show. First up, Rick Lewis, partner with the Silicon Valley-based U.S. venture partners. Following that, Kirk Coburn, co-founder and managing director of Surge Accelerator, focused on bringing technology into the energy space. All that right after this.
Where will the energy come from to move us forward? From natural sources in abundant supply, or perhaps a man-made source? At NRG, we believe innovation will solve our energy needs. That's why NRG is moving away from fossil fuels towards wind, solar, and other sustainable technologies to power the smart grid, the electric car, and our clean energy future. We're using all of our energy to develop more of it.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Paul Dickerson.
Welcome to another episode of the Energy Makers Show. We are here at the Rice Alliance competition with Rick Lewis, partner at U.S. Venture Partners, all the way from California. Rick, good to have you on the program.
Pleasure to be here. Thanks very much, Paul.
Absolutely. So tell us a little bit about the firm, and then I'll ask you more about where you're investing.
Sure. So U.S. Venture Partners is an early stage technology investment firm, venture capital. By early stage, I mean about 70% of the time, we're part of the first institutional money into a company. So we get involved very early with the entrepreneurs to help them build the business over time. We have a $600 million fund, so we typically invest sort of $10 to $15 million per company over the life of a company. And we're very interested in information technology, clean tech, and healthcare, so we're a very broad firm.
Now, I know you're looking seriously and have looked for some time at energy efficiency. Tell me what it is that you find attractive as an early stage investor in the more efficient plays.
Right. So as an early stage investor, and I think you'll get different versions of this from different guys, but in my view, early stage investing comes down to attacking a big market or a rapidly growing market with a great team and ideally some differentiated technology.
Right.
So energy, no question about it, very large market, not
Sure.
going anywhere. It's getting larger and larger. And there are a couple ways to attack that. One is from the supply side and one's from the demand side to sort of balance that equation. And one of the sort of lasting anecdotes for me, I took from a presentation I saw by Art Rosenfeld, who was
Sure.
Commissioner
California's
for a long time.
finest.
Yeah, California Energy Commission. And he tells his presentations were always fact rich. And one of the interesting anecdotes was about the refrigerator and air conditioning efficiency standards in China, which save as much electricity as the full production capacity of the Three Gorges Dam.
Wow.
Yeah, so it shows you efficiency is a needle mover in a very large market.
Well, let's pick one of your portfolio companies within the efficiency space.
Sure. So we've become very interested in energy efficient lighting. 10 to 15% of all the electricity consumed in the U.S. is commercial lighting.
Right.
A very big target. And the lighting industry, which obviously the energy consumed is a very large number. The lighting industry itself, by the way, is a $100 billion market,
Sure.
right? And so it's basically been about the same for about 100 years. Then the technologies have evolved very slowly. And you have a situation where you have a new entrant, LEDs, and LEDs have a fundamental property in that they're semiconductor devices. So they have this sort of Moore's Law-like
Right.
property where cost is dropping like a rock and efficiency or performance is increasing very rapidly. So that's a very disruptive thing in the lighting market. And what we've identified a couple opportunities that we invested in over the past several years in that category that are kind of leading that sea change. One is called Redwood Systems. This is a lighting controls and building intelligence company. So what they do is they the penetration of intelligent controls for lighting is actually remarkably low. It's in the single digits percentage in the U.S. That's just money being left on the table.
Sure.
And what Redwood does is they actually put the lights on the network. So each light is powered and controlled just by low voltage DC wiring, like Cat5 Ethernet cable. And what it enables you to do is very intelligent things with regard to dimming the lights without the occupants noticing when there's daylight coming in, turning the lights off when people aren't in the room, and they're individually addressable down to each individual light. So it's incredibly efficient. And they have some very interesting customers like Facebook and Google and SAP, and they're showing 75% savings in some of these installations on lighting. And when you think back to how big of a target it is,
sure,
that's a needle mover.
So do you see some of these startups in the efficiency space ultimately becoming large companies on their own through IPO or through the private equity market in New York, or do you see them as acquisition targets from a GE or others?
So we always fundamentally invest on the proposition that it can be a standalone public company.
Got it.
And we have a good track record there, and I can say that very objectively because my firm's been around for 30 years and I've only been there for 7 years, but we have 75 companies that have gone public. That's our goal.
Got it.
And I think this market, both again being at sort of the nexus of energy and IT and lighting, those are all such large markets that there are going to be many public companies in these categories. Another company that we've invested in makes LED lighting modules. So think of them as making the equivalent of a bulb or a lamp.
Right.
And they're bringing it to the masses by making the light quality as beautiful as the light quality of a halogen bulb. And that's been one of the fundamental impediments to LED adoption, is that everyone knows they're efficient, but no one likes the way they look.
Right.
And so this company, Zucotto, is solving that problem. What they do is they actually take, they have a clever design of a cavity that includes some blue LEDs that generate the light. And the LED light gets projected through a remote phosphor. That remote phosphor, and I'm simplifying this a little bit, but that converts it to white light. But there are many advantages of having those two components separated.
Sure.
In terms of they can get the light exactly right. The reliability, the long-term reliability of the product is excellent. And because the phosphor isn't directly on the chip, the color doesn't change over time. And that's been sort of one of the big complaints in that category, and one of the reasons why people aren't willing to adopt. So.
Well, Rick, it's a pleasure to sit down with you. Thank you for coming by today.
Thanks very much for having me. I really appreciate it.
And that concludes our discussion with Rick Lewis. We'll be right back with more right after this.
The future is here.
You can't see it. It's electric.
At NRG, we're providing clean energy and now charging stations to make the electric car a reality. Kinda makes you want a boogie woogie, doesn't it? NRG, moving clean energy forward.
It's electric.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show. With me now is Kirk Coburn, Managing Director and Co-founder of Surge Accelerator. Kirk, great to have you on the program.
Paul, thank you for inviting me.
So tell us about Surge Accelerator.
Great. Surge Accelerator is a seed fund that's also driven by mentors for startups and early stage companies that's focused exclusively on energy companies. So we're really looking at the energy space and energy software specifically.
Early stage energy, and you're based in Houston.
We're based in the energy capital of the world, Houston, Texas.
So how, for our friends more focused on Silicon Valley or Boston or the Research Triangle in North Carolina, why Houston?
Well, there's a phenomenon going around the world of seed accelerators. So Y Combinator in Silicon Valley and Techstars in Boulder created this concept. What they found is, and what other accelerators around the world found, is that we can in markets that are big, we can find entrepreneurs and we can accelerate them and create a lot of value out of them. Well, those of us in Houston said, why aren't we going to focus on what we're the best in the world at, which is energy? Let's focus on only energy and create a lot of value and a lot of success.
All right, so walk me through the process.
Sure.
You're a new company. What types of software or services type software are you looking for, and then how do they work through the system?
Well, what we say is we're looking for companies and entrepreneurs that are solving the world's energy problems using software. So these are startup companies that have a product or idea that's in the energy space. And one of the most important features of any business is your partners. How am I going to get a customer? How am I going to get partners that can help me get to that next level? I need money to do it.
Right.
So we provide money. We provide the partners and the access to customers that they critically need to really accelerate their business and validate whether they have a true sustainable and large company.
And what's the investment size that you're looking at?
We give these companies $30,000. We run them through a 3-month boot camp. We give them free services such as, free banking from Silicon Valley Bank and free cloud hosting from Rackspace and some other partners. And then we connect them with mentors. And that's really the critical part of the program.
Explain the boot camp a bit.
Sure. One of the things about an entrepreneur is they do not have time. They don't really like to pause and think about working on the business versus in the business. So what we try to do is we provide them with free office space. We co-locate them together with 10 or 9 other companies. And the purpose of that truly is the esprit de corps. Let's learn together. In 3 months, it's very intense, and we help them teach them how to run a business. We knock and ping on their business model and their business plan. We challenge whether they have the right customer, they understand the customer need, that they actually have a competitive advantage, so that after the 3 months they can really go to market or change their market. We believe a lot of these companies will pivot, which is the term used these days, their business model.
And did I hear that there are 3 core areas, the digital, oil field, risk management? Can you explain those categories?
Sure. We really looked at, we want to focus on energy software. What are the 3 core areas that we think we can provide the most value? And the reason we pick these areas is because our mentors have expertise in these areas. So one is the digital oil field, so upstream. Seismic is a good example. Platforms of how to find our natural resources and be more efficient. Energy trading and risk management. So the hub of energy trading is here in Houston. And then third is the smart grid. So building efficiency, energy efficiency that touches even the consumers, but we're focused primarily on the utility market.
Now, what do you say to folks that say, look, we already have some of these government-funded incubators, or whether in Houston or in Texas generally, or even nationally? How do you differentiate between what you're offering and what they offer?
Well, we're for profit, and our focus is we're trying to find the 10 best companies in the world. We're going to give them all these resources for equity in return. It's common equity, so there's no restrictions on it. That we want to be really equal with the founders. But the reason we're for profit is we actually are not going to make decisions based on what someone else wants us to make. We're making decisions because we expect these companies to create a lot of value. That is our primary and our only metric, is do these companies provide value?
All right, so Kirk, what are some examples of success that you've seen?
Right, well, there's been some deals that have gone through Accelerator. So there's one out of Techstars in Boulder called Simple Energy. Great fit for us. They're in the smart grid space. There's a similar company that actually went through Rice business plan competition. They went up to Accelerate Labs in Chicago, another member of the Techstars network. Both of those 2 companies in smart grid would have been a great fit for us. They went to 2 programs that are non-energy specific, so they struggled in some ways of finding, a great fit amongst their peers. There's also a company here in Houston focused on energy trading, like Woodland Solutions up in the Woodlands. A great fit for us. They're making some revenue. They have a customer success, but they're really, how do I get my company to that next a larger step, could they go into a program like ours and accelerate?
Now, and you just hinted, but for companies out there watching, saying, all right, am I right for Kirk and his team? It's software related.
Right.
What size? Do they have to have revenue? Is it two guys in a garage?
You know, we look for great teams, so great entrepreneurs. There could be an entrepreneur that has just an idea, and if we think it's a great idea and we think that they're the right person that can run with the idea, we'll surround them and ask them to join us. There are companies that already make revenue that provide a lot of value today, but there's something holding them back, and that could be resources, capital, that could be connections to customers, and that's really where we come in and say, I think that would be a good fit for us as well. And what we have found is, through our partners in the Techstars network, is that there are companies that are later stage that go into these programs that look back and say, I learned a bunch of the program, I got connected to the right people, and I even learned through these idea early stage startups. So we think that there's value on both sides.
Now, you spoke about the mentors. Tell us a little bit more about who they are and what value they add.
Well, one of the things I learned in business school, and I think applies today, is if you're going to be in a company or in an industry, go get the best people in the world, because they're the ones that can really validate whether you have a good idea. So how our program works is we connect these companies to, we have over 80 of the best mentors that are energy executives from companies such as Energy Future Holdings that owns Encore and Luminant. You know, guys like Brian Landrum, the former COO of Reliant Energy. You have energy entrepreneurs, guys that have actually sold companies to the Schlumbergers of the world, their software companies. We have the venture capital firms that invest in energy. We have service providers and people in the energy business that have a lot of technical know-how. We have all those 80 mentors can provide a lot of value to these customers, and that value is capital, customers, board members, connections.
Now, Kirk, let's say I'm one of these entrepreneurs, comes in, I'm working with you. What is a win for me?
A win is after 3 months, you most likely have changed your business model 2 or 3 times, which is not fun for any entrepreneur to hear, but it happens. And the best companies go through that stage. Right. Really is we're trying to provide the long-term vision so they know exactly where they're headed. They have milestones in place. So after 3 months, we hope that they have a product, or that product's been massively improved. We hope that they've landed a pilot customer within 6 months after the program. And that pilot customer could be their first customer. It could be actually landing a new customer, and that they've landed capital. So more growth capital for a later stage company, but for a startup, they've landed their first round of funding to build their product out and to land those customers, which are critical. But we're focused on landing pilots, landing customers, because that's really validation for any company.
Well, Kirk, thank you so much for coming on the show today.
Great, Paul. Thank you very much. It's been a pleasure.
And that wraps this episode of The Energy Makers Show, heard on the radio nationwide and seen right here at TheEnergyMakers.com. I'm Paul Dickerson, and we'll see you next week.